Hey everyone, and welcome to the AgeTech Connect podcast. I'm your host, Daniel Cottmeyer. Today, I'll be chatting with Sarah Thomas, an experienced CEO, entrepreneur, and venture partner at AgeTech Capital. This episode is all about the when, where, what, how, and why of funding an early to mid-stage company. So if you're an entrepreneur thinking about or preparing to take on investment, you're going to want to stick around for this one. Sarah, thank you so much for coming on to the AgeTech Connect podcast.
Thanks for having me.
Tell me and the people out there, what's your background? What got you into AgeTech? What are you all about?
Well, my background's actually occupational therapy. So I started my
Oh, very
career.
cool.
Yeah, it's
Yeah, I'm a
I
physical
feel like
therapist, so it's always good to meet somebody in the rehab space.
absolutely. Yeah, I consider myself a professional problem solver, really, that as an OT, really looking very closely at the lived experience of how people are aging, the caregiver experience, and then really meeting people where they're at, helping them to define the goals that they had and helping them to achieve those goals. And that evolved into doing the same for products in the age tech space as well as companies in the ecosystem. And so over time, my roles evolved into innovation and entrepreneurship and the venture investing side of age tech. But the mission's always been the same. It's really, how are we adding life to our years and not just years to our life. And that's always been my motto since I was quite young. So that's
Mhm.
sort of where the origin story is for my age tech career.
And I love to hear that coming from you because I've always been a big advocate for healthcare professionals, especially those that don't think their skills translate into the business world or the corporate world. Being a healthcare provider, I mean, you are a problem solver. You take on multiple clients throughout the day and you react to them proactively and reactively, figuring out what they need, how can we meet their goals, and then what are the best materials using the resources that we have to get them to meet their goals. So it's really cool that you've been able to take that healthcare provider mindset and utilize those skills all throughout the spectrum of working in the corporate world, entrepreneurship, now as an investor.
Yeah, definitely. And I think the beauty of age tech is it's not just healthcare, it's really a societal issue. I really think that it touches health, wealth, housing, transportation, social connection, work, of course, and individual roles or their occupations, but also purpose. And so it makes it an interesting space to build solutions in and then to invest in.
I really want to get into what makes age tech such an attractive vertical to you as an investor, but before we do that, I want to get more into your background. So you said you worked as an occupational therapist, but you also mentioned that you were an entrepreneur for a little while. What were the sorts of companies that you were spinning up? What have you been involved in?
I've been advising and investing for over 25 years. So, everything from bringing products to market for other companies to investing and then operating companies that are
Mhm.
tech enabled service deliveries. I run right now a Mezcal, which is a staff hosting company in Guadalajara, Mexico, because I realized as we were advising and investing in age tech startups as well as senior living operations and the ecosystem corporations, everyone was looking for staffing that could be effective and efficient on their mission around older adults. And so I invested and then now run basically a staffing company that helps us to build teams efficiently globally, but through the use of technology. So you could still consider it age tech our clients or those who are creating solutions in the aging space in the US, and the staff and teams they're building are in Mexico.
Very cool. So what would you say your balance of work is as far as because I mean, you got your hands in a lot of things right now. Are you spending most of your time running that company or your own ventures or as an investor? Like, where are you spending your time these days?
It's all focused on aging. So I still am doing that problem solving lens where I'm meeting someone and it's all around a startup or a corporate that's doing something within the aging experience. And then I know my ecosystem best. So I'm able to either bring direct advisement through my consulting firm, but I have other principals and consultants that do a lot of the execution once I start on strategy. If they need capital, I work with AgeTech Capital as a venture partner. So we have a master SPV. We're investing specifically into age tech and the longevity economy. We have an angel investor network called ATIN that I run. And so we're able to bring more angels together to invest in these solutions as I'm speaking with them. And if they need staffing, I have a staff solution as well that I'm helping to refer over to. And so it's pretty balanced. It's all around the aging experience and how we're improving those companies that are serving those who are aging.
Very cool, Sarah. Sounds like you got a little bit of everything. Now, the corner that I want to focus on mainly today is, your investor side, because with this podcast, we have a lot of individuals who are starting their own ventures and they're at different stages of starting their venture. And, sometimes acquiring capital and utilizing capital effectively can be very daunting, especially if you're like us who came from a healthcare background. A lot of times you don't get a lot of education on the business side or the financial management side. So coming in with a great mission and a great product and a great idea, but really no idea how to acquire capital, how to use it, and how to be responsible with it. So that's where I want to focus today. And you've already touched a little bit on this, but what do you think it is about age tech that makes it such an attractive vertical as an investor? Because as an investor, I mean, you've not a general investor, you focus specifically on age tech. So what attracted you to this vertical as an investor?
So I would say when I started investing and advising, there wasn't a category called age tech. It
Mhm.
was fintech, prop tech, health tech, and not necessarily a category called age tech. But now we have this specialty area and it crosses all of those other categories. But in order to really focus in this investment vehicle and vertical, I think it's growing in three categories really, and why there's more attention to it now more than ever. I think one is the demographic shift, I think the economics of it, and I think technology. So when I look at why people are excited about investing in H tech, it's those three things. I think the demographic shift, it's the largest in history. Older adults represent one of the largest and fastest growing consumer markets in the world. So, of course, as an investor, we should start to look at that. Also, the technologies like AI are finally mature enough to address the challenges that we've been facing for generations, but we couldn't solve for the last 10 years. We are now looking at technologies that can help to really focus on these areas and make impact and bring solutions to the market that couldn't exist before. It isn't a niche market. This is the longevity economy. And I believe it's one of the largest opportunities in our generation to invest in. And I think these driving forces of the demographic shift and the financial impact that we can make because of the social impact we can make, and then the technological advancements are really key drivers in the industry.
That's an interesting perspective because it is a weird confluence of events that's allowed age tech to really flourish, right? Like if we didn't have the technology and the aging population coming up at the same time, as well as the individuals with the free time and the resources to address these larger social and important health issues, we really couldn't have this whole age tech label and create it as its own vertical. So this is a very interesting time to be developing in this space.
Exactly. But it's exciting time.
Yeah, for sure. So if we're talking to an entrepreneur like with a great age tech idea, but no idea about how capital investment or funding works, there's a lot of investment going into this space, but what are the options for an early startup to fund their development? What can they start looking into if they have an idea, but no idea on how to fund their venture?
Yeah, and I think a lot of entrepreneurs are really mission driven. They come from a life experience that drives them to want to solve for a problem that they or their family experienced. And I think that's what excites me about the passion that's in this sector, but they may be unfamiliar with where to look for capital. So they can bootstrap and certainly talk to friends and family and try to get their idea backed by those around them. There are still a lot of grant opportunities in the private and public sector. There are accelerator programs that help to fund initial ideas and bring them along their journey of the startup growth. There's angel investor networks that I can talk a little bit about because ours is recognizing a gap that I think exists still in that market. I think strategic partnerships too, those that they're solving for or impact, I think also are looking to help to invest to accelerate those solutions. So on the strategic partnership side, whether you are going direct to consumer or impacting families or impacting institutional or residential or health system, those strategic partners may be interested in also bringing this product with you to market and help with the strategic capital placement as well. Family offices are really mission driven, and then there's venture capital, but it's not the only path. Every capital comes with a different expectation, also different advantages. I think what we recognized at AgeTech Capital and we supported through our ATIN network, that's our program for angel investment. We saw a gap in those early stage startups, as you said. Not only do they maybe not know how to find capital, but it's harder to find that seed stage funding. So at AgeTech Capital, we have ATIN and we gather angels in our network to bring them together to curate these deals for early stage startups. And the Age Tech Connect ecosystem also brings together a lot of successful entrepreneurs who have exited. For instance, they may have capital that they want to invest but haven't done that before because they were on the entrepreneurial side and not the investment side. Or we have, some of the events that Age Tech Connect hosts, like the senior living focused areas or large corporate executives come together and they're interested in the space, but maybe they don't know where the deals are or how to necessarily vet them with expertise at their table. So, by pulling angels together that are interested in the space, but with a really expert selection committee that helps to select the startups, we put two on a month into our platform so that the angels can come together, have materials to help assess those companies, really help them to go through their diligence process together, and then join forces together, maybe with smaller check sizes, but form an opportunity and a vehicle for them to invest that money into as an angel, that's still valuable with an SPV for the startup that's an earlier stage, sort of seed stage company. And by curating these opportunities with the expertise and materials, I think that we're bringing together both the investment community on the angel side and startups into a new channel for investment at an earlier stage than some of the VC funds.
Yeah, because these opportunities would really be at the very early stages of a company. And kind of, from my understanding, you have the opportunity you've talked about bootstrapping, grants, angel investment are kind of the way to get the early money in, and then maybe like your friends and family bringing in. What do you think are like the primary differences between taking these different approaches? Because you mentioned some of the positive benefits of taking on angel investing, right? You get that network of individuals. They kind of help walk you through the diligence process. So you could see those as the positives, but then, I'm sure it also comes with some downsides as well. So could you kind of compare and contrast these early stage funding opportunities for someone who's, just getting started out?
I think founders really need to ask themselves, do they want a fast growing company or do they want a profitable company that they control for a very long time? Those are both really great outcomes and great businesses, but they're different and they require different capital and support along the way. So, venture capital is designed for companies that want to grow very quickly and pursue very, very large markets. And there are incredible businesses that should never raise venture capital, and that's okay. You may start off with some of this grant funding or accelerator focus, and that it's priming for just individual growth that's profitable over the long term. And that's okay too. Bringing those solutions to market doesn't always require venture capital. And then there are some that can really grow at scale and really accelerate the growth in a faster way if you do take the venture.
Hmm. And you've mentioned some of those opportunities, the grants and the accelerators. Explain to me a little bit how that works, because I find those can be underrepresented, especially, you're coming in, you're not sure, you hear, venture capital, you got to get funding, you got to raise Series A, you got to raise seed, and they can kind of get in your head. But you're telling me not everybody needs to go pursue that. So, what does it look like to pursue some of these other opportunities like bootstrapping, like grants, like accelerators?
Sure. So I was an advisor to Techstars, for instance, and they have accelerator programs where they bring in mentorship and there's an exchange of some equity in exchange for programming that allows you to grow what you need to. How do you develop a board packet? How do you run a board meeting? What does product development look like in your market and your space? What does it mean to build the proper team for the company of your stage, and bringing the expertise across all of the portions that you need in order to create a successful company. And not all companies that are in an accelerator graduate an accelerator to have venture capital or to be venture backable. Some actually just come to be a sustainable organization. We also have lots of opportunity in other sectors like the NIH and NIA have incredible funding to be able to research and prove out some of the assumptions that are being made to produce clinical validation for the work that people are doing, or even to match with corporations. If you are looking at the NIA or you're looking at SBIR grants, for instance, to say, hey, I have this amazing product, I want to prove it in the market, and I need this supportive grant funding to prove the commercialization strategy with the corporate partner so that we can run a pilot, have it funded, and then prove out the outcomes, because research and evidence is so important at that earlier stage. And it allows you to develop with the organizations that are going to be impacted, or with the older adult or family member, and allow for some grant funding to help substantiate the claims that you're trying to make on the napkin when you have an idea, and bringing that into a sustainable organization. All of those don't necessarily mean you need venture capital at the end of that process. You could be a sustainable organization after, but it's unique to each of the companies that are creating.
Tell me more about this NIH SBIR style funding. What does it mean? What is the process of getting it? And what is the opportunity there? Are we talking a few $1,000s? Are we talking a few $100,000? Are we talking a few millions? What are we looking at when we talk about these sorts of grants?
They very much vary based on each of the grant sources and the call for grant sometimes, and I don't run them, so I won't make individual claims of what they're doing right now, but in the application processes in the past, I've supported various startups along the way. I advise one right now that did a phase 1 and phase 2, where there is a pot of millions of dollars that are allocated
Wow.
to grant funding and to support the research and the studies that are needed for these age tech startups. But they're all very unique to what the people are building, what they need to actually prove out. They put a budget together for what that would cost to do that, and then they receive specific criteria for the application process, and they're able to receive the support and advisory work and mentorship from the NIA or from the SBI para process. But they also, each call is slightly different. Of course, it's dependent on the individual category as well as the time and shift. But I definitely suggest looking up the NIA's platform, just looking on their website. They always post the criteria for inclusion and the timelines for applications. And they're always hosting some great events to gather people to answer questions on what their process is like and what kind of funding they could expect if you do receive the grant funding along the way.
And now it's my understanding that most of these grant opportunities to the NIH are non-dilutive, right? Meaning like it's the closest thing to free money you can get in the United States. Is that true?
Yes, many of the grants, and I won't speak to specifically to, any of the categories, but yes, many of the grants are non-dilutive, and they have great opportunities to not mess with your cap table if you do decide to go out and seek venture capital funding later on.
Mhm. Now, if there's a lot of great opportunities early on that allow you to retain most of your company's equity, but if you are deciding to pursue venture capital or early versions of that, angel investing, whatnot, obviously you would have to, give up a bit of equity in your company. But what are some of the things you gain beyond just the financial fast tracking when you engage with a venture capital firm like yours?
I'm gonna speak probably a little too on my side. I think it's very important to find specialized investors, and you shouldn't just look for money, you should look for alignment before you look for money. So, the expertise, especially in this space, matters. We are looking at companies that are sitting at the intersection of healthcare, aging, technology, caregiving, reimbursement and regulatory environments, consumer behavior. Investors who understand each of those ecosystems really can help founders move faster and avoid very expensive mistakes. Where there's generalist funding, that can help to accelerate for sure. But in the case of AgeTech Capital, or my role as a venture partner, I come with deep subject matter expertise clinically, as well as in all of these markets that they're trying to enter. So, product market fit, go to market strategy, the value creation that you can bring to the table as partners is really important to look at. I think when you're looking at capital, capital can open a door. But really, I think the experience helps you to bring the founder through the door. And it's important to me to align your capital to the mission that you're on, and make sure you're bringing strategic investment in as well.
Yeah, I love that you brought that up because you can kind of hear this sentiment in the entrepreneur community of like, money is money, right? Just bring that money in. Oh, especially every entrepreneur likes to think like, oh, just give me the money, I'll handle the rest, right? And for some individuals, that might be the case. But what you're really saying is that if that money comes in and it's not aligned with an individual that can take you through that door, then you could almost have it won't be totally dead equity on the cap table in the sense of, you've got that money in, but you've essentially got a partner that's not a good partner, right? And so when you're searching for these, investors or capital partners, you don't want just the money. You want somebody that's going to come in and really help you use that money well.
Well, they could be good partners because capital is important even
Yeah.
if they can't bring the strategic value, but I do think it also depends on the maturity and sophistication of the team. So if you have everyone already on your team that can help you to open every door, to understand your customer, to understand how to build a proper business model in this space, understands your market and the market you're trying to enter, then maybe you don't need strategic capital. I personally think on the investment side, we bring a lot of value at AgeTech Capital and those other firms that are investing in the age tech space in particular. They're bringing strategic supportive value to the table and we become partners, true strategic partners, not just shareholders. Certainly, some capital is okay just as support just on the financial side, but I do think there's great value in the experience and expertise as a specialized firm like AgeTech Capital brings to the table.
So as an entrepreneur pursuing capital, it can be daunting thinking you're just trying to sell yourself to whatever the venture investor is. How do you recommend that entrepreneurs approach almost interviewing the venture group that they're going to work with, right? Should entrepreneur come in being ready to say, even though you're going to say yes to the venture group, I'm going to say no because it's not the right fit for me. How do you recommend an entrepreneur goes about that?
I mean, I think that it's mutual assessment to see that it's the right fit. I think that when you're pitching to a venture capital provider, you want to keep your pitch simple. You know, what's the problem you're trying to solve? Why now? Why is it important now? Why your team brings certain level of expertise and experience as well. So why would an investor want to invest in your team? Why are customers buying or why will they buy what you're building? Why do you think that there's a need right now and who's the buyer? And why will you win? Why will you, as a founder, your team, your product be the one in the market to succeed? And yes, you have to pitch those things to the investor, but, in age tech specifically, I also wanna know, are the founders building with the older adults and with the caregivers and not just for them and not just based on a hypothetical, but real problems and challenges that they're trying to solve for. And all of those things are how I would look at a startup and how I would start to look to see if it's the right fit for me to invest. But also, as a founder, to question how you can help me through each of those challenges. How can you help me build the team? How much do you understand the market? How much can the firm support me to win? Are you only looking for capital return and not social impact? We make a social impact at Age Tech Capital. That's our focus to make exponential impact in the decisions that we're making to invest in. And I think that becomes apparent that we're investing in people and we're investing in solutions that make impact. But that's the reverse assessment and analysis too. The startup should look to see, does the firm care about the impact we're making, not just the returns, but also the impact on society and the impact on the longevity economy. So I think it's a mutual interview.
At what stage in the process should an entrepreneur begin to start their side of the interview in the sense of, some entrepreneurs can feel like, oh, the audacity, they're going to offer me money and I'm going to question them. So when should they start, kind of saying, hey, are you the right fit for me, and kind of going the other way?
I think that it's also just in general, when do you start looking at capital? When do you start
Mm.
trying to
Yeah, that's a good
attract
question.
capital? And all of it, it's the same answer. So for me, it's you start building relationships before you need the money. And that's the time you're assessing each other, the fit, the
Mm.
personalities of the firms, the product, it's mutual. I think that the best fundraising process is probably 6 months to a year before you open a round and need any money. Investors love seeing progress over time. We want to see that founders can consistency in their execution, commitment to what they're doing, but it gives the same time frame for the opportunity to have the founder really interview the firm, understand that it's the right fit, feel the support that they need, feel that the understanding and expertise is what they need at the table. And so I think it's mutual during that relationship building.
That's a really interesting point you just brought up because it's something that I've been personally interested in is I've almost had the thought in the past that once you reach out to an investor and they respond to you, you kind of have your one shot and then you get your chance to pitch. And if you blow it, you blow it and you've lost that connection. But what you're saying is that you actually want to make these connections early in kind of like a soft sense. So you start having these conversations, even if you know you're not ready to take on capital, but it kind of keeps the relationship warm and you can show the investor that progress for when you actually are ready to take on capital. Is that what you're saying or am I misunderstanding?
No, I think it's really important to start building relationships early and at different phases. So, we mentioned ATIN and the Angel Investor Network. The angels that are coming in, several of them and our selection committee in particular, we individually do angel investment, but we're also a part of firms and funds that have different criteria for potentially later stage investment. But the earlier we get to see where can we drive value? Do we join an advisory board? Do we come in on an angel investment? Do we help you to prepare? Are you committed early to making changes? Are you coachable? Are you respecting the problem that you're trying to solve for and not just trying to sell tech? If you're just selling tech, we probably aren't interested because we want to see that, 2 years from now, you're still trying to target the same problem area and create solution and not just sell a product. And, we all have different criteria at different phases when we come in as angels or in a seed stage versus what the diligence and criteria may be at a series A or B or beyond. And so starting relationships with the individuals in the investment ecosystem across that continuum is really important. I think that it's not one and done. It's having great transparency and great self awareness. I often have investors who say, I have this criteria, you're not ready for me yet, but come back to me when you are ready. On the reverse side, I always coach the entrepreneurs to be really self-aware. Don't try to say that you're something you're not. If you come and say, "Hey, I'm not ready yet, but what would you need to get to yes a year from now? Because I'm building now and I want to be on your radar. I know I'm not ready yet." Do your research on the investment firm. Do your research on their investment thesis. Don't pitch into an area that you know you are not ready yet, but you to have that relationship built and to have the alignment is great early on.
What's the right way for an entrepreneur to go about that? Is it in-person events, cold emails? How do you begin building those relationships? Because it can be notoriously difficult to get connected with, the right venture group.
Yeah, I mean, I think that in the ecosystem, you look at the Age Tech Connect, for instance, there are a lot of events and opportunities to engage in the ecosystem where there's angel investors, large corporates, firms, funds sending representation to each of the events, the large events as well. You're thinking the healths, the CES, AARPs, Age Tech Collaborative events, all of these larger events that have an age tech focus, there's usually representation of those who are focused on age tech investment as well across the continuum, whether they're there speaking or scouting or advising or truly having investor meetings. There's usually some representation. And I think that being present in the ecosystem events is important. If you can't get to everything, and you can't, as you're bootstrapping and you're not funded and you're focused on your startup, you cannot be at every event. That's a distraction from the core work that you're doing. But you can reach out to individuals that you see that are going to attend or to speak. You can email and say, "Could I set up a call? I can't afford to be there right now. My head's down on my product and my team, but I'd really like a conversation if you give me the opportunity." I think there's lots of ways to engage virtually as well.
And would you say it's appropriate to, keep following up where after you've sent an email, or is it if you send an email, give the investor a break afterwards? What's the cadence at which somebody should start making those connections?
I think it's asking them how they would like to be approached. So if they say, "Hey, listen, at your stage, I have someone that's a junior analyst who follows and tracks. So please send the information. And we usually touch base quarterly, or we would love any updates on milestones or achievements that you have in the next year. Or we're not investing right now at this phase, but here are other referrals to other firms. And I think if the answer is no, I won't invest, there is also a why. Is it not the right thesis? Is it not the right time? Is it not the right firm at all? And I think asking deliberate questions so that you can have the proper guidance saves both sides a lot of time.
It's very interesting. So, say you've done everything right that we just talked about. You've made the warm connections. You have people that you've talked to. What are the general things? And I know you can't speak specifically to every single company, but what are the things that an early stage company needs to do from inception to procurement of that first seed round, Series A round to really make themselves investable?
It really depends on the phase of the capital that's coming in. So, angel investors may just love a person and their idea and come in individually very early. Friends, family, individual angels may come in without there being a product in the market. You may look at seed stage companies and say, hey, you have to have put in enough sweat equity and enough of your own risk and time and energy and find a way to fund this first MVP because we need at least a customer in the market to validate that this thing is real, that you have a
Mm.
passion about. And once you've done your effort, we'll come in on our effort and we'll come to help to match that and get your product further in the market. And there's different levels of that criteria based on each of the funds and firms. The more you get into Series A and beyond, you're not only looking at team, product market fit, but you are looking at that revenue and truly understanding the market, who is the buyer, that the timing is there to be able to expand in the market, that your path to growth is sustainable, and that you are coachable. I think that there are some strict guidelines for fund thesis across all of the VC world, just like there's strict criteria to come into any of the grant funds. You have to be this ready with this amount of product in either in the market or this stage of progress before we're able to accelerate the next stage of progress. So it's a little bit different, but it's worth asking each of the contact points that you have along that continuum what their criteria is and how you can best ready yourself for it.
Gotcha. And then you said that sometimes investors come on as advisors. Is it reasonable for an early stage entrepreneur to want to bring somebody on as an advisor to kind of get them investor ready? Is that a good approach to accomplish those things that you've laid out?
I love that approach personally. I think that bringing in advisors to round out the expertise that you bring, sometimes we see clinicians who are passionate or family caregivers who want to solve for whatever their mom went through or a personal journey, but they don't have the business acumen or they don't know the financial implications or how to build a P&L. And you don't necessarily need to have all the expertise, but bringing in advisors to round out what you already have at the table is really important. And I think showing that commitment to rounding out your team helps you ready yourself for any amount of capital or any of the pathways that we've discussed so far. Advisors to bring the expertise you don't already have is extremely important. And some want to make sure that you're taking it seriously and are coachable and adaptable to the advice and expertise that they're putting their time into, and they'll be paid for that time. And some are coming all in with you and they just want to come in for equity so that they can see you through the long term journey that you're on and you go on it together. So there's lots of ways to bring advisors on.
What do you think are the qualities of a good advisor, just from the perspective of an actual investor yourself? When you're looking at these teams, when you see an advisor on, can you tell which advisors are just there as placeholders to put a good name on the company, or which advisors are actually putting in the sweat equity with the investors? Is there a value to having that just placeholder advisor? Like, what is the idea of a quality advisor that looks good to you and will actually help an early stage entrepreneur?
It's a great question. It's not a straightforward answer. So
Mhm.
I've had,
They never are.
yeah. So I've seen companies that on their pitch deck, they're putting an advisor by namesake. But if you talk to that advisor, they barely know the company. They're not adding strategic value. They didn't invest themselves. It's minimal time commitment. It's just they allowed them to put the name and the face on the deck.
Mhm.
And that backfires, in my opinion. Sometimes it's enough to open a door for someone to take a look to say, hey, wait a minute, you have so and so, and they're quite famous in the field. And then I have had the complete opposite where you have no idea who this person is. However, they are rolling up their sleeves and they have major strategic value because they have a lived experience or they have years in an industry or they have a Rolodex that's off the hook and they're able to bring immediate value in the area that's lacking on the core team. And so it truly varies. I think the best is a combination of both, where you take someone on as an advisor who can guide you and bring to the table a piece of expertise that you don't have, and also is committed to roll up their sleeves and make that change with you and stay in it, not just from arm's length apart. The worst advisor category for me is those who haven't really done much, those who don't have their own impact that they've shown, and then have some free time and join as an advisor, but don't bring either the credibility in the market or the expertise to actually drive change for the team. And so those are the ones I would be a little bit weary of, maybe the consultants who don't have all of the experience you need and whatever category you need it in.
Very good advice, because I find once you put that title on your LinkedIn or something, you'll get all kinds of messages from individuals saying, "Oh, look, I'd help you out here. I could help you out here." And it could be tough to make sure that you're making the right decisions for who to bring on and who to have involved in your company.
Absolutely, and I think those with the most integrity and longevity in the advisory or consulting space typically are the ones who are very transparent and say, "I cannot help you in this area. That's not my area of expertise." And they're not trying to sell themselves into your organization. They're proving their value and their worth on something that you don't have already at the table.
So let's say you have this entrepreneur and they've done everything we talked about, right? They've made sure they've looked into the criteria of the venture firm they're interacting with. They know they meet the milestones. They know they're ready to take on venture capital. They have the team together. They have some product and market. And so they reach out to their warm connections and they get the investor meeting. They're ready to formally pitch and take on that money. How can an entrepreneur be ready for that investor meeting when it comes to creating the pitch deck, getting all the stats together, getting all the metrics to prove that you've made that progress? Because again, that can be a daunting task, even if you have that warm relationship, to actually go in and say, now it's time, do or die. We got to pitch this thing.
Yeah, I mean, I think that there are a lot of resources out there. If you're looking at even just pitch competitions and the categories that we're looking at when I do a lot of judging of pitch competitions or curation of pitch competitions. I've done some with Jeff and we've partnered together at AgeTech Connect for them as well. You're looking at product, you're looking at team, you're looking at market. It's what I had mentioned before, the why now. What are you creating that's going to solve a problem or a challenge, and who is the team you've gathered to make this happen, and why should we believe that your team is going to make it in the market? Who's the buyer? What traction do you have? What revenues do you have? Or why do you have a belief that you will succeed, depending on how early stage you are? Or why do you believe the buyer exists and they really need your solution for a problem that's very real? And I think that that's the best way to prepare for an investor meeting as well. You really need to prove that you know the market and you know what problem you're trying to solve for, explain and articulate your solution, your team, and who's going to bring that solution to market, and be honest about what you need next. What are you going to use the capital for? What's lacking in what you have right now at the table or within the product or the team? And how might this organization, this investment group help you to get where you need to go?
Yeah, that's a really good point. Making sure that you know exactly what you're asking for from the investors. Do you find a lot of entrepreneurs come in and they've got the whole pitch together? They know what they're solving, why they're doing it, exactly how they're going to make money in the market. And they say, and now we're looking for $2 million. And the investor says, well, what are you going to use it for? And they go, oh, they haven't thought it through, at least not as well as they've thought through the rest of the pitch.
Yeah, I think that that is a good point, and those who are successful in getting that check usually have a good plan on what they're gonna use the check for. So I think making sure that they come up with that or that they're starting relationships early and asking, what would you do? What would you need to see in order to write that check a year from now? And getting some feedback early on from those you're going to reach out to when you actually need it.
I mean, this is going to be kind of a pure logistics question, but what does the investor meeting actually look like? I mean, what is the structure? I'm sure it depends on the investor, but is it typically 30 minutes, an hour? How long are you pitching for? Is it a quick pitch and then a lot of back and forth questions? Like, what should a entrepreneur be mentally prepared for in that meeting?
It really varies on the phase that you're coming to look for funding in as well as the firm. Let me explain a little bit about ATIN and the Angel Investor Network because that's a I think earlier stage on the seed stage side our application process, for instance, we have a consolidated 5-page deck or short deck that we request with specific information and application that we ask for so that some of the things we just talked about are already articulated and sent to us beforehand so we come informed to the meeting as well. A longer deck with really more comprehensive team, product, moat, IP, go to market strategy, growth strategy, use of funds, all of that stuff is within sort of that larger comprehensive deck. And then we really care about the founders. Are they passionate? Are they coachable? Are they approachable? And do you want to work with these people? Because you're on this journey together for a while. And so we do a small video that they submit as well. And with all of that, we bring it to the selection committee, and the selection committee has a set of criteria that we're reviewing all of the applications from, and we're selecting two each month to go onto the Angel Investor Network. And ATIN, the angels are seeing all the materials that we just collected, the assessments that we've put together so far. We've narrowed it down to two. And when they're looking, they each have their own criteria. If you're writing a small check for $10,000, you may only care about the founder, or you may only care about the problem that's trying to be solved. What is the opportunity out there saying, I really care about caregivers because I personally am a caregiver, and any solution someone's making to help the caregiver journey and decrease that burden, I want to invest in. It's very emotional and personal sometimes when it's an early angel investor. Now, if you're looking at coming in on a series A plus to a fund firm, they may need 5 million in revenue before you even open the door. And so there's just different criteria. On the Angel Investor Network, we have the next step once we bring them onto the platform. The angels express interest in learning more, and we do a meet the founder. So you get to actually meet the founder, ask additional diligence questions before you write that individual check and before you come into the SPV together. So there's lots of opportunity to express the mission that you're on, the product that you're creating, why you think the timing is now, why you think your solution will be the successful one, how you will penetrate the market and grow in the market, and why your team is the best to do it. And I think that there's different criteria at the phases as well as in the firm's criteria.
Would you say that the later stage you get in procuring investment, kind of the less maybe familiar it gets and the more hard metrics it gets in the sense of, like you said, in the seed rounds, in the early stage angel rounds, it's kind of just okay, like do we like you? Do we mesh well? Are we aligned with the mission? Let's see what you can do. Versus once you get to that series A plus, now it's kind of just these investor firms are real professionals and they're looking at, can you make us money? Are you meeting the criteria? Do you have your stuff together?
There is greater diligence and more sets of criteria, but it is, I find, across multiple firms that it still has an element of who are you going to be working with for the years ahead. So I can personally believe that a product is excellent and that it's already got revenues being generated and there's so much opportunity in the market and it's not going anywhere. This is only going to grow. And I could still walk away if I feel that that founder is going to be really difficult to work with for the next couple of years. And this is me speaking just personally. But I've co invested and collaborated with other investors who have said the same thing because they've been stuck where, for instance, a very technical founder is insistent that they're going to be CEO forever.
Mm.
And they may be better suited as the CTO and recognize at a specific time in the growth of the organization, it's better for the organization to step aside and to bring in a leader that can help with this next strategic growth pattern for whatever that is. But if you have someone who's starting off either arrogant or not coachable or challenging, then the board is going to have challenges with that individual 2 years from now, too. There's a likelihood of that. So, not speaking on behalf of any firm, just saying that it is still about the people, even if the product is great.
For sure. And that kind of brings into the next thing I'm interested in. What can an entrepreneur do to kind of kill the momentum, even if they've got the meeting? And again, like you said, the product looks good. And you mentioned the investor is arrogant. They don't seem like they'd be good to work with. Are there other things that an entrepreneur can come in and you just say, no, I don't think we're moving forward with this?
Well, I'll again speak personally. I don't like lack of transparency or inflated metrics. If anyone comes to me just individually, if they come to me and say, no one has ever done this before, I am the only one in the market, then I don't believe they've done their research or they're only talking about their technology. And I think that instead of talking about their technology, they should talk about the problem that they're trying to solve for, because probably there's another company in some way that's been out there trying to solve that problem before and may not do it the exact same way. But if I see a box and theirs is the only one who has ever touched this, I don't believe they've done the research. And having done this for over 25 years, sometimes it stops the conversation right away because I've already met with 5 founders who have said something similar. And so I know even if you don't see it out in the public that others have tried this before, and you should know the success and failure stories of those who have come before you so you can learn from them and you can do it better and you can bring it to market. And it's not to say that they aren't the best, but if they say they're the only, it's usually a red flag for me. And then I do think that they should also be curious, want to learn, and not think that they know everything. Confidence is important and expertise is important, but to know that they can be coachable. And for me, it's to be really obsessed with the customer need. Who are you trying to help? Who are you trying to create impact for? What problem are you trying to solve? In age tech is always a problem for someone. And you're working with, this is a human business. We are working with creating a better human experience, creating a better lifestyle, looking at how we're improving the quality of life for older adults and the quality of life for society as well as for the caregiver support network and system. And so if you're looking constantly at what does that customer need and you're obsessed with it, the tech will come, the solution will come. You will continue to pivot and adjust course as needed. And I think that you'll have the resilience that is needed if you're really trying to solve for a problem that exists and not just focused only on the tech.
So, a red flag would be somebody that comes in kind of married to their solution rather than married to the problem.
Yeah, for me, it's just a personal preference. I'd like to see someone who's committed to the mission that they're on, but the mission is to solve for the problem, and it's not just to bring a product they think is great to a market that they don't know if they need it or not.
One of our prior podcasts was with John Larisha from Welcome Home Software. Check it out if you haven't watched it. But he said something around, he's like, yeah, I get a lot of crap for this, but I say, I don't love my product. I don't love my product. I love the problem that I'm solving, and the product is a vehicle to solve that problem, but I don't love the product, right? The product is just a means to the end because I love solving the problem so much. And I thought that was a really cool insight from him. And it sounds like you're echoing the exact same thing here.
Yeah, I love John. I've known him for years, and I think that that's a testament to why he's done so well and continues to do so well because he listens to the evolving needs of the market and he adjusts the product to what the market needs. We're also in an environment where the regulatory and reimbursement environment changes. If you're only solving or you're only bringing a product or company to market because there's a window of reimbursement that you just saw and you're going to target that reimbursement, that makes me very nervous because that reimbursement can go away the next year and who's paying for it? What is the actual consumer need and how can we focus on that? And then we can always iterate the product design and the go to market strategy as needed.
It's a great insight. So, If you have an individual that's successfully acquired ventures, so you've invested in them, the money's coming in, what happens after an entrepreneur has acquired? If it's similar, we can do it all the same, but you maybe even angel investing to Series A investing. What are those steps immediately after? Because a lot of times from an entrepreneur mindset, you say, I got the money. Yay, we're done. Right. But then there's all the rest of that development afterwards. So, how does that relationship look? What are the responsibilities of the entrepreneur? How can they actually live up to the promises they made in their pitch that got them the investment to begin with?
It's a great question, and it's a little bit phase dependent, but not exactly. I think you should align on what the expectation is once receiving capital before you receive the capital. So, investors do want regular communication, but they want it so that we can see the milestones, that we have transparency into the progress. But also, for me, I'll speak personally, I love to know the challenges that they're having. Don't tell me only the successes, because if there's a way we can help you through the challenges, with people in our network with experience on our committees or within our group. The best investor relationships to me feel less like oversight and more like having an experienced operator in your corner helping you to grow. And we're not surprised at board meetings on did you hit your metrics or not. We would love to hear along the way, how can we help and what door can we open for you? And to me, there's value in that.
Do you find entrepreneurs are nervous to talk to their investors about struggles they're having because they think in their head, oh no, like, they're going to take their money back or something like that?
Different entrepreneur sophistication has different levels of transparency, I think. I think sometimes the daily minutia, no board really wants to know all of it. I
Yeah.
think that
Yeah.
there's a we have our own businesses to run as well, and the firm has a large portfolio. We don't need to know every little hiccup. However, if there's a trend or there's a pattern we think we can support, absolutely. Let us help, let us advise along the way. I think some startups are at a place where they know, hey, I could use some guidance in this. You are expert in long-term care or insurance, or you bring this clinical expertise and we're hitting a roadblock, and they come to those on their board who they know or in their investment cap table that they know could help through those challenges. So some more than others.
And that kind of brings us back to what we were talking about earlier, the benefit of being with a partner that's specifically in the niche, right? Like in our case, Age Tech, like you are with AgeTech Capital. If you are just with a broader, venture capital investor, it might just be, we don't know your problem. That's why we gave you the money to solve it, right? But the benefit of being with somebody like AgeTech Capital is that the person you invested in can actually come to you and say, hey, can I access your network so that it benefits you because your investment becomes more valuable, and it benefits the entrepreneur because they have somebody in their corner that can help them out.
Absolutely. And I think by having that specialized expertise, we really bring a lot of value add to the portfolio companies, whether that's through ATIN on the angel side or through larger investment in later stage. I think there's a lot of expertise at the table.
So I know we're running kind of right up towards the edge of time, but I do want to pick your brain on what areas of age tech do you find personally interesting moving forward as an investor? What are the specific areas that you think are really going to start catching on or catching fire in the next 5, 10 years?
What I think will happen and what I want to happen might be two different, but anyway, right now, I think that I really like AI enabled companies. So AI enabled health, cognitive health and brain health, financial well-being, caregiver support. I really like looking at decreasing the burden of the caregiver, and we have both unpaid family caregivers as well as the caregiving workforce. That is the paid caregivers that are in need of support, whether that's attraction to the workforce, training and retention support, decreasing the burden, financial support, new models of caregiver delivery, augmenting and automating certain tasks. So that could be use of robotics or technology or AI to support the caregiver journey. I really love any technology right now that's helping people remain more independent longer, and that could be independent as the individual or as the caregiver. So, how is the caregiver staying in their role with better health and longevity in the role that they're playing? I think those are sort of the main categories that are exciting me right now. For me, there's a common thread there that how do you maintain people's agency and dignity and the choices as they age? And if anything's supporting that within the ecosystem, then that's where I want to be focused on.
That is a great mission, and, kind of in line with that, I think I saw it might have been on the LinkedIn or a website or something like that. AgeTech Capital highlighted health and wealth span. I don't think I had ever heard the term wealth span before. Is that an area that y'all are particularly investing in, and could you define that? I can kind of imagine what it means, but dive into that a little bit for me.
Yeah, and I would say that that's where I think we need more attention. So we
Mhm.
finally, as a society, are starting to talk more about health span and not just lifespan.
Yeah.
We're seeing that in the longevity buzz, and people are starting to take proactive attention and care to their own health and well-being. So the health span part I love right now is buzzing. But what I think we're lacking is a plan for how to afford our 30 more years or 3 decades more in our lifespan in order to maintain that health span. And that it comes from an individual perspective as well as a society. And so that's the wealth span part. Financial well-being drives our housing choices. That drives our caregiver options and how we can pay for our caregivers, our stress levels and the impact of the stress levels on our health. Our health outcomes are often based on wealth span as well. So I think that that's really a category that we need to look more into, and we're looking at different investments that help to support that wealth span and that journey.
And I would imagine under that umbrella, you'd also include solutions that help for financial security and avoidance of fraud, because that's a big issue with older adults as well as, unnecessarily losing money because of really just a difficulty navigating financial technology.
Absolutely, absolutely. That's a great example, and we're looking at retirement planning and reverse mortgages and sustainability of our current income paths, as well as fraud and abuse that is a trend in the market too, and how are we maintaining our wealth as we know it. So yeah, there's lots of opportunity within the wealth span.
I got to add that to my vocabulary. Wealth span, health and wealth span, lifespan, health span, wealth span. That's now locked in. Now, given all of these exciting areas, do you have any companies in your portfolio that you want to highlight? Maybe you've invested in recently or have been taking off that you feel like is really embodying the next generation solution for some of these things?
I think the best method is I would love to have people come to our website. We feature each of the portfolio companies as well as on LinkedIn for AgeTech Capital. You'll see the investments that we're making in through the Angel Investor Network as well as featuring our portfolio companies. We do something called the Morning Edge, and we often feature some of the entrepreneurs telling their story, which helps us to understand what they're doing and why, and letting the public see the passion that they have and the solutions they're bringing to market. I would say what we've talked about today for categories and for those that we believe are making the most impact so far, our portfolio companies all really highlight those criteria. So I welcome anyone to join our LinkedIn at Age Tech Capital or take a look at our website as well.
A very diplomatic answer, Sarah. But yes, all the companies are doing great. Now, if there's entrepreneurs out there who want to get in contact with you or Age Tech Capital, what's the best way to do that? You already mentioned the website, LinkedIn. Is there any way that an aspiring entrepreneur looking for venture capital should get in touch with you personally or the firm?
Sure, yeah. LinkedIn and website, we have ways to get in and follow all of our different initiatives. My email address is sthomas@agetechcapital.com. Happy to also answer questions or guide maybe where you fit within the ecosystem and help to support where in the journey you might need the most attention or support. So able to have people reach out to me or via LinkedIn as well.
You have any big Age Tech collaborations coming up? Age Tech Connect?
Well, I'll come to the summit in September and
There we go. Of course.
work with folks there on the Age Tech Connect. I work closely with Jeff since the inception of Age Tech Connect as an advisor to the ecosystem, and I love to see each of the chapters come together and each of the cities thrive within the executive directors that are running such powerful events have been able to make it to the LA one, and Daniel's great, and looking at each of the localized impact as well. I've always loved that because I've done this for so long. I find it fascinating. We all have there's like a global need, but there's also localized need. Maybe an area that has a food desert, or this area is really focused on fintech, or we really need rural health support. And what does rural health support look like? And what do the solutions look like that are driving impact there? And there's sort of buzz topics within all dimensions of wellness. And then there's sectors that are, oh man, it's so healthcare driven. And all of the solutions that we want to talk about are in the health ecosystem. It's fascinating to see the regional approaches too. So the next large one for you guys for Age Tech Connect will be the event in September that I'll see everybody at.
Very cool. Well, I hope to see you there. And if any of y'all are coming, and you should, make sure to connect with Sarah Thomas. Well, Sarah, it's been great to have you on. I really appreciate all your insights. I know this is going to be immensely valuable for any entrepreneur coming out there. So I really appreciate you taking the time to chat with me today.
Great. Thanks for the time too. This has been fun.